Hello everyone, I'm Jenny, and for the last 2 decades, I've had a front row seat to how new technology disrupts, disappoints, and ultimately changes everything. And today, we need to talk about the most terrifying question in the tech world. Is the AI bubble about to burst? .com boom 2.0 or just getting started? 2 years, that's all it took. We watched this green pixel become the next Tower of Babel, reaching straight for the heavens. Some call it the fourth industrial revolution. Others say it's simply the most expensive illusion ever conceived. Remember the .com bubble? Back then, if your company name had .com in it, your valuation soared. Today, if your product whispers the word AI, investors pay up. History doesn't repeat itself, but it certainly rhymes. But this time, will the ending be just as brutal? This is the cold, hard reality. Hundreds of billions in capital expenditure. What is it buying? Revolutionary productivity? Or just a slightly smarter chatbot? Wall Street is starting to ask the most dangerous question of all. Where is the money coming from? And where is the actual revenue? But make no mistake, burst bubble does not mean the death of the technology. The bubble burst, but the internet remained. And it changed everything. We are standing at that exact same crossroads. Now some companies will go to zero, but a few will emerge as the undisputed giants of the next era. The question isn't whether the bubble will burst. The question is, when it does, will you be holding worthless stock or the blueprint for the future? I'm Jenny, and welcome to the great gamble on greed and the future. Let's begin. Trillions of dollars at stake. One troubling question: are we in a massive tech bubble? This is why Wall Street is talking about the AI bubble. From chip makers to cloud services, valuations are compared to the late 90s .com boom. But is it the same this time? Today, we'll dive into 1. The reason for the stock surge. 2. The 3 major constraints, slowing growth. 3. Our final verdict on the bubble. Part 1. The AI run-up and valuation. The hype. The craze is driven by the promise of generative AI and the endless demand for compute power like GPUs. This has resulted in explosive early revenue for a few companies. Valuation. Reality. The core investor question. Do current earnings and cash flows truly justify these high prices? Let's look at the PE ratio. .com parallel. Many .com companies had no earnings. Today's AI leaders have strong cash flow. This is the biggest difference. But the risk of a bubble still exists. Spar to the core constraint is 1. Power supply. Data centers require staggering amounts of power. Grid limitations are becoming a physical cap, which is harder to solve quickly than imagined. 2. Data center. Chip bottleneck. Severe shortages of high-end AI chips and the physical limits on building and deploying new data centers mean supply can't keep up with demand. 3. Customer capex. Who is buying all the AI power? Enterprise customers have finite capex budgets. Once they slow down buying, growth for cloud and chip makers slows dramatically. The correction. The sharp correction we're seeing is the market adjusting its expectations for the rate of future growth, not necessarily the end of AI itself. Part 3. Conclusion and the future. Summarizing to views. Bubble argument. Valuations are too high due to supply constraints. V's new era argument. Tech change is real and companies are stronger. Our focus should be on long-term technological shifts rather than short-term market fluctuations. We need to monitor key indicators to determine whether the market is overheating. What do you think? Is this another bubble or a buying opportunity? Let us know in the comments below. Thank you for watching. See you next time.